Hello and welcome to another brief episode of Monday Markets. People seem to be enjoying the shorter videos, so shorter videos you shall receive. That is until Friday, where we'll do a casual Friday with myself and Don, and then the following Friday will be a podcast episode. We'll try to get one of the low time frame scalpy guys to talk about that. So a couple things to cover on BTC USD. Obviously the market's green, so let's get some context as to what's going on with levels and also the monthly close. So the monthly close is looking like it is going to be a close above support, right? If we take the bottom of our range, our lowest close monthly at 35k, you have one test, bit of a bounce, and then as you often get with levels, you'll get the wick test and then another retest soon after, where usually you'll get the bigger move. So 35 to 37 supported, and then the nearest resistance is this mid-range at 43 to 47 if memory serves correctly. So that's the range the market's in. I could technically end the video there, but let's add some further color. Although the reason I said that is because really the most important thing is that at the moment, at least what we'll derive from this monthly close, is that support supported, resistance resisted, and the market still seems to be higher time frame range bound until proven otherwise. One thing I'll note is that I will add this range high highest close level, and then the thing to infer from that is that if the mid-range of 43 and 47 is broken, I don't really think there's much in the way for a high time frame move towards 58. Even just eyeballing the chart, which is something I do a lot in terms of trying to ascertain areas to trade, you can see that this range here is pretty tight in terms of where the market is right now. I realize it's a big range in percentage terms, just in terms of market structure on a high time frame basis. This range is quite tight, and if you look at, looking at the eye test, where is there potentially more space to be filled? It's from here to here. So accordingly, if I'm looking for more trending moves or for bullish momentum continuation, I think within this range, it's buy support, sell resistance, and take low time frame trades that make sense in the interim. But if you're looking for something meatier and something more likely to be sustained, I really think it's the 47 to 58 leg that's going to be much more attractive. For now, we'll work with what we've got: 43, 47 resistance on the monthly, 35, 37 support on the monthly as well. With that in mind, let's hop over to the weekly time frame. Now, myself included, and Don and others are very much paying attention to this weekly range high at, what is that? That is 37k or thereabouts, I think. 38k, yeah, 38.2, of course. The price action around this level has been kind of murky. The close below into the reclaim was fine as a setup, but it got stuffed at resistance. Then you had a close kind of below, or more or less at the level, before the market rallied kind of early on Monday. So I still think this is like a decent area, but really if we're looking at market structure, we can look at, all of these rallies that we've had over the last month or so, where have they been getting smacked down? And for me, it comes down to this market structure area, which is also confluent with our monthly level at 43k and thereabouts. And you can really see that's where weekly market structure first broke, or at least the decisive break in market structure took place, whereby you had a sequence of low to high, higher low, higher high, and then the market's coming down. If it were going to make a higher low, and you can go back to previous streams, we discussed it at length. I think there's one titled Bitcoin Breaks Market Structure or something like that. If the market were to make a higher low, this low would have to have been defended. And you can see that it wasn't, given the market traded through it and continued lower. Now, that doesn't mean this level suddenly becomes irrelevant. If anything, that break in market structure is what's currently providing a lot of resistance and difficulty for the market. And if we can take the liberty of, instead of just drawing one line, taking this market structure area in general, maybe this cluster, you can see that our aforementioned 43 to 47 monthly level also happens to be a key area of weekly market structure as well. So as far as resistance confluence goes, I really think these are the dog's bollocks. I hope that's the appropriate idiom. I think that's a good thing. In any case, what does this pump mean at the moment? Well, if you want to make a tentative case for a higher low, that's one I'm somewhat open-minded towards. Like, it doesn't look too bad. That is to say, this higher low essentially. But my broader premise is that higher low doesn't really achieve anything as long as it is below this weekly and monthly cluster area confluence resistance, whatever you want to call it, at 43 to 47. Now, I do think above it, right, if we manage to get this market structure reclaim and break a resistance, etc., and that wouldn't be terribly unforeseeable given, the market's rejected once, moved lower, rejected a second time, potentially made a higher low here, right? So maybe some evidence of relative strength starting to emerge, which is nice. But in any case, I think because of the monthly and weekly confluence, just based on ranges, market structure, whatever fancy TA words you want to throw into it, it's worth putting a lot of weight, at least in my system, onto this area as resistance and just perhaps more accurately as a bias level. And as we discussed, I think the 50K-ish area, that there are some levels here, but they've mostly been retested. I really think this is more important. And my eye goes back towards our high time frame range high, closer to 60K, however you may want to delineate this area. So you can see on the weekly time frame, essentially the monthly idea comes to life, whereby the momentum continuation trade or the range reclaim trade, etc., is available from basically 47 plus to 60 plus, and that will be an attractive trade just in terms of the upside to capture. And it would also then present the same bias on the bullish side. That is to say, if the market manages to breach this threshold and close above and consolidate and do whatever else, you can then essentially use the same 43 to 48 area as your bullish bias. That is to say, the market looks fine and is expected to trade towards the range high as long as this area, this box, has now turned from resistance to support. I know this is all very speculative, tentative, and so on and so forth, but really, if I had to just pay attention to two structures, I mean, the support ones, as I said, are slightly murky on the weekly, but the monthly 35 to 37 is fine. Now that the market is up and seemingly moving favorably, where does that strength start to mean something, right? And it's not just like one green day and we all get bullish, or one candle changes our entire bias. What does this rally have to achieve in order to shift market structure or do something more constructive on the higher time frame? And for me, it's this 43 to 47 area. I know it's a bit broad. You can use one level at a time. You can use the top level. Doesn't really matter. However you want to delineate market structure is fine. But in any case, for me, this is the key level. Resistance is all proven otherwise. I really think for Bitcoin, and also ETH has a similar level at 3K or thereabouts. If you're going to be looking for good signs of strength and a leg which might have legs and continuation and not just crab back down or chop or get whipsawed by the next algo headline, for me on BTC, it's this as mentioned. And until then, this is more or less into resistance. And on ETH, just to make the point very clear, there is a similar, almost identical level of market structure around 3,000, which is to say this kind of 3K to 3.3K level, identical argument to BTC USD, low, high, higher low, higher high. If you're going to have a higher low, this had to hold. It didn't, and now it's acting as resistance. So in the same vein, if you get a break of resistance at 32, 3,300. I don't think there's a lot in the way for it to resist the rally until at least 4,000 and potentially higher. So that's kind of all I've got. This is a nice move. There are some tentative signs of strength in the market, not just because the candle is green, but also because you could be getting a tentative higher low on the weekly time frame. But for me, it has to do a little bit more to convince me that this is going to have legs, and that is to say, offer the first meaningful high time frame market structure reversal, which for BTC would be 47 plus, and for ETH would be 3.3K plus. Final bit of low time frame commentary, which might be useful, is the following. This is the first intraday higher high that the market has made in some time. And by that, I mean just a 4-hour break in market structure. All right, you had lower lows and lower highs the whole way through. And then certainly, I mean, this was arguably a break in market structure, albeit not the most convincing one. But this most recent impulse quite clearly fits the bill, even for the most conservative case. I think on lower time frames, if you just take a ballpark kind of shelf to incorporate the most recent highs and lows, which is also used to delineate market structure, As long as the pre-breakout low isn't violated, I think market structure in general looks constructive. And on the 4-hour time frame, and you could make a case essentially that you've got low to high, higher low, finally a higher high. And just as per our weekly charts on Bitcoin and ETH, if the market still starts to pull back to make a higher low, you've got a very clear bias level to assess the strength on a dip. And for me, it's that same old kind of 38, 39 intraday level outlined here, but we also know it has weekly time frame significance also. Any weakness, back below this shelf, we have to start entertaining the idea that this is some sort of failed breakout, and at that point, the low looks vulnerable. So hopefully that's a decent little mix of timeframes to give you context for the market. I'm not biting at this yet. I didn't get any setups triggered, and to be honest, I haven't really been looking either. Just kind of eye test where the market is kind of right now. You can see it's entering or approaching some sort of previous area of support turned to resistance, but hopefully the higher time frame breakdown is also helpful in that regard. I know it's this weird feeling where you finally get something that looks really positive and immune to headlines, and it's tempting to kind of kick yourself for not being on board the move and so on and so forth. But overall, broader conditions are still kind of shaky at best, and at worst, there are far clearer trades if the market flips resistance or pulls back to make a higher low potentially. I think those are better opportunities than chasing the tail of a 10% up day. That's all I've got. I'm trying to incorporate the feedback, not to repeat myself, as per your wonderful comments in the last video. And I don't say that sarcastically. All the feedback we get, constructive, destructive, whatever, is much appreciated. I'd love to hear from you what else you'd want to see on this type of channel. I know more educational stuff is popular, and we'll get to that. But for now, please enjoy this breakdown. We've got trletter.com, our weekly newsletter, coming out tomorrow. Duck on Wednesday, and then Casual Friday on Friday. That's all from me, and I wish you a wonderful week, and let's see where this goes. Doesn't look too awful. Let's hope I haven't cursed it. Take care, and see you on later on in the week.